Right. Okay, guys. Can you hear me? Am I audible to you? Yes. Right. So, can you hear me, guys? Yes. Right.
Yes,
Okay.
yes,
So, good afternoon, and let's start. Sorry for the delay. It's nearly 1 hour delay, right? So, let's start. And 1 hour means I informed to you. So that's why. And prior to the class. So, however, let's start. Like we are discussing the control accounts, correct? So we are discussing the control accounts. So yesterday we discussed about the control accounts. So yesterday we discussed about the control accounts. So in here I told you there are two kinds of control account we maintain. Trade receivables ledger control account. Trade receivables ledger control accounts means customers who are like who are our assets, understand? So they took us goods on credit basis, they need to pay back. Got it? Right? So trade payables ledger control account means they are our liabilities, right? We purchase their stocks on credit basis and we need to pay back, right? All clear? So then what I want to tell you in here, we discuss some questions, and this is another example in here. You can see, let's see example, a trade receivables ledger control account, right? Okay. So look at the trade receivable ledger in 10.2 figure. There are, it's in textbook page number 122, right? Page number 122. Okay, 122. Clear? Right? So you can see trade receivable ledger. You can see these are trade receivables. Trade receivables means all these are our customers, right? Customers means which customers? Cash customers, or cash customers means like cash sales customers or credit sales customers? Credit sales customers, understand? Right? You can see these are the opening balances 185,500, right? So then 750, which means you can see then all the balance forward. There is another one. See opening balance of this one 750. Then 450. The total is, you can see, 3,550. Understand? The total opening balance. For the control account we debit. Can you remember we told? Individual customers account total debit balances we record under here, right? Then you can see credit sales. All the credit sales are here: 900, 400, then 600, 900, 400, 600, another 350 is here. Yeah. In here to Alan, we have made sales twice. Twice. Got it? Twice credit sales are there. Total, you can see how much the credit sale? 2,250. Understand? Total credit sale, we debited to the sales trade receivable control account. Now, bank means in here, can you remember about the cash book? I told you there are 3 column cash book, right? So discount, cash and bank. Now bank means that customer made a check payment to us. Clear to you? Right? So that's why. So when the customer made a check payment to us, cash book bank column debit, relevant debtors account, what will happen? Credit. Understand? So you can see that's why. In here you can see the description is the other account name. Right? Debit entry. This is the credit side. Debit entry is name. 820. So 900. So only two, right? 820, 900, 1,720. So discount allow. Discount allow means what? When they are paying back, we gave the discounts. How much the discounts? 30. Then 20. Then so only two, 30 and 20, which means 50. So you can see discounts allowed also here, bank also. Then apart from that, can you remember about the sales return? What is the term called sales return? Sales return means what? What is the term called sales return? Sales return. Credit customers, return the goods. Understand? What is the term called sales return? Credit customers,
Customers return the
return the
goods.
goods. We made credit sales. We made credit sales. Then customer returned back to us. Understand? I told you all the ledger accounts are which kind of accounts? Asset accounts. When we sell, asset increase. So what we do? We debit to here and sales account credit. Understand? So in respect to the control account, when the customer return to us, when we sales, we increase the asset. When they return, we need to decrease the asset. Understand? So when they are returning, there are no more our assets. Understand? So asset decreases means which side? Which side? Credit side, right? So what we do, sales return, you can see or not in here. This guy T Allen, he not made any returns, but you can see P May and K White, both of the two parties have returned the goods to us again back. Understand? When they return, what we need to do? We need to credit the sales return. Understand? As the in here, you credit the debtors account as the sales return. So the total we credit to the here like control account. Last one. So you can see something called irrecoverable debts. What is the term called irrecoverable? Recoverable debt. Irrecoverable debt. What is the term called irrecoverable debt? Irrecoverable.
Which can't pay.
Sorry.
The ones that we can't pay.
Yeah. Now it's like this. Now I made a sale to you. Credit sale. Now we made a credit sale, right? So that person passed away. Now when then see this person, C Young, we made a credit sale. Now think this person, no, KY, we made a credit sale. Understand? Can you hear me, guys? We made a credit sale. Now credit sales means what? This person is liable to pay back to us. All clear to you, right? Now because of some reason, think that person has passed away. Okay, or something happened, right? Made a insert like converted as a insane person. Understand? So or something happened, lost. Now he is like something like ran to another country. Got it? Right? So because of those reasons, we can't like recover the debt, recover the money from that person. So if that person is not paying to us, we are crediting this person and we are removing this person from the books of account. Theory, right? That's why irrecoverable debts means, now you can see irrecoverable debts also we credit to here. So you can see balance carried down in each and every thing. You know the total we take, balance carried down, we get the totals in here. You can see 1250, 780, 1240, and this is no BCD VPFY balance we write off as a irrecoverable debts. Now no more debtors. So only the total of these 1, 2, 3 should be identified in here. Understand? Right? So that is the thing in here. So it's easy for you to understand, nothing much important. So see in here, there are entries in the control account go on the same side as in the personal account, trade receivables or trade payable. Individual account side, same side in the control account also recorded. Understand? If the sales is comes to the trade individual account debit side, in the control account also it comes to the debit side. Then exam hint, important. Do not forget to bring balance down. If you fail to do so, you may lose easy marks. In this example, there were only 4 ledger accounts for business. However, there could be 400 or 4,000, 40,000 ledger accounts. In these cases, it is more difficult as to obtain the information concerning the total of each type of item. Understand? Exam hint. In most common error that students make on control accounts is reversing all the entries, which means now you know in the trade receivable control account we need to pay the where we need to record the sales. Sales should be recorded under debit side. Why? Sales are our assets. Understand? Sales are our credit, sales are our assets, so we need to record what? Debit side, right? Sometimes you mistaken you record under credit side, so you lose your marks. Got it? So examine cash sales do not include in the trade receivables ledger account. Now you know cash sales record under cash book debit, sales account credit. Understand? Only the credit sales record under here, right? So then you can see from your studies of double entries, now you can see the balance CD in the figure need to balance the account. The figure in the difference between two sides, which was 5,800 minus. So the credit side total is 2,530. So the balance is 3,270. In your textbook, write in here in the control account, page number 123. In here, right, the balance is 3,270, right? BCD in here, the value, BBD value, right? In the right, 3,270 in front of the question mark, right? 3,270 BCD. Next page. 3,000 BCD 3,270. BBD same value 3,000 in here also 3,270. Now look at the trade receivable ledger. If see it is correct, the balances now let's see the balances also should be included to like the total 1,250, 780, 1,240. So the total of those four also equal to that. Understand? 3,270, which means it's tally. It is correct. So the figure of 3,270 can be corrected in the trade receivables control account as the balance carried down and the balance brought down. Right? Remember that the main purpose of the control account is to act as a check on the accuracy of the entries of the ledger. The total of the list of the old balances extracted from the ledger should equal to the balances on the control account. If it does not, a mistake or the mistakes has been made, this will be this will have to be found, right? So case study, trade receivables account. Tamara is now to new to bookkeeping. So and is not quite sure about control accounts. She is able to balance of accounts in the trade receivables ledger has included them below. You can see sales return, credit sales, money paid by receivables, discount allowed, cash sales on revenue, irrecoverable debts. Complete the trade receivables ledger control account for Tamara. Okay, let's see. Write in your writing book, right? Case study, page number 123, right? Case study, page number 123 in your writing book, right? Case study, your writing book, right? So, case study, page number 123. Okay, let's see. Yeah. So, what is the thing they asked me? Trade receivable ledger control account. Okay. So, let's prepare trade receivables ledger control account. So, trade receivables. control account. Now tell me the principal we apply, asset, liability, equity, income or expense. What is the principal we prepare? Huh? What is the principal we prepare? Used to prepare this asset, liability, equity, income, expense, trade, receivables, ledger, control account. Receivables are liability. අපිට හම්බ assets, right? Receivables are what? Our assets. So asset principal increase debit or credit. Asset principal increase debit or credit.
Debit.
Debit acts increase debit, decrease credit. So asset principal increase debit. One right. Okay. So let's see. Sales return. Where we record sales return. When the sales are returned, our asset what will happen? Decreases, right? So where we record sales return. Sales return comes to credit side, right? Sales return. How much? Sales return now? Rupees 840. 800. Number 2. Credit sales. So credit sales are the only sales we record, right? So sales. No credit sales are recorded under here. How much? 8,678. 8,670. Right? Money paid by receivables. When the money paid by receivables, when we sell our asset increase, when the money receive, the asset decrease. How much? 5,762. 5,762. Right? Discount allowed 342. Discount allowed. Discount allowed 342. Right? Cash sales revenue. Now tell me where we record cash sales revenue, debit or credit?
Debit.
There? Cash sale. Sorry?
Debit.
Huh?
Debit.
Can't hear. Debit or credit? Cash sales revenue. Yes, what is the answer? Cash sales. In the receivables ledger control account, we record cash sales revenue, debit or credit. We can't record the cash sales, right? I told you before 5 minutes. In the receivables ledger, we made only the credit sales. Understand? So we can't record the cash sales. If so, you can't record this. Got it? Right? Cash sales are not recorded in the receivables ledger. Why? Receivables? Receivables. What is the number of receivables? I want
Receiving.
receivable. Sorry?
Receiving.
Receiving. So receivable means, sorry. Receivables means the things we made from the credit sales. So cash sales are not coming under here. Irrecoverable debts 45. So it comes under credit side. How much? 45. Now just only you can balance. 8,678. 678. 8,678. Get the total of the credit side and tell me the BCD value. balance carried down, balance go down. How much the credit side total? Total of these things. Get the calculator and balance. How much? Balance and tell me credit side total.
So 1,609.
Sorry?
1,609.
Credit side total?
689. So balanced.
1000?
689. Balanced.
You mean the credit side total?
No, sir. I balanced it.
How much the base CD?
1,689.
1689.
89.
Let me see. So once you get the credit side total, how much the credit side total? Now you should be able to use the calculators.
1,989.
Let's see, just wait. 5762 plus 342 plus 45 plus 840. How much? 6989. My the total of 8678. Yes, 1689. Very good. That is the answer. 1689. Okay, that is the BBD value. Better you can turn on the videos and wait. Huh?
It's raining, sir. So
All
we
right, it's
have
fine.
an
It's fine.
internet.
Right? Okay. Now let's see the other one. Information for control accounts. Right. Information for control accounts. The following table shows where we can find information you need to draw up control accounts. Trade receivables is a control account. Opening trade receivables, you know, list of the trade receivables balance drawn up at the end of the period. Credit trade receivables total from the sales day book. Sales return, you know, total from the sales return day book. So check received, cash book, bank column on debit, received side, list extracted over the list of the special column for checks that have been included in the cash book. Now, you know, in here what says where we can extract these information. So opening balances of the debtors for the control account, we can find from where? From the ledger balance in the individual ledgers account. Credit trade receivables total from the sales day book. Okay, credit trade receivables we can take from the total sales day book, right? All the like credit sales we can take from the sales day book. Sales return we can get from the total from sales return day book. Check receive we can take the cash book, like bank column debit side. Cash receive cash book, cash column on debits receive side, right? It's extracted total of the special column that has been included in the cash book. Discount allowed, total of discount column in the cash book. Closing trade receivables, list of the trade receivables balance drawn up at the end of the period. Total figures, the total of entries for that period, the total should be the same, I'll tell you. So the final total of outstanding trade receivables at the end of the period is shown on the statement of financial portion under the heading current assets. It's in the future chapter, right? So trade payables ledger control account. I'll explain it. Right? Trade payables ledger control account. So opening trade payables, list of the trade payables balance drawn up at the end of the previous year. So credit trade payables from the total from purchase debut. Purchase return, purchase from the total from the purchase return debut. Checks paid, cash book bank column on credit side is extracted the total of the special column that has been included in the cash book. I'll explain one by one again. So check paid, cash book, cash column on credit payment side. So list extracted over the total of the special column that has been included in the cash book. Discount receipt, total of the discount receipt column in the cash book. Closing trade payables, list of the trade payables balance drawn up at the end of the period. Total figures, total of the entries that for that period, the total should be the same. Control accounts are normally prepared in the same way as any other account. The total of the total debit entries in the ledger are recorded in the left side of the control account. The total of the various credit entries ledgers are recorded in the right side, right hand side. Figure 10.4 shows how information is used to construct a trade receivable ledger control account for the month of May 2017. Ledger, letter A, B, C, etc. In the diagram related to the item in the tables below. You can see. So I'll explain it one by one. So then you can have a clear idea. Right. Okay. So it's like this. Look here. So I'll take one by one. So now you can have a then clear idea. So just see. This is the thing. This is the trade receivables ledger control account. So what is the term called trade receivables ledger control account? Our credit customers. Understand? Who are our credit customers? What is the principle we apply? We apply the which principle? Asset receivable means our assets. So increase debit side, decrease credit side. Okay. Normally, what are the things we included? Sales we included in here. Sales credits. Then cash, right? So then the checks receive, cash receive, check receive from the debtors are paying checks to us for their balances. Understand? Then discount allowed, discount allowed, right? So discounts allowed. Apart from that, sales return, sales return, sales return, sales return. So these are the things we can get to know, right? So okay. Apart from that, just remember opening balance, balance brought forward, opening balance. I'll explain one by one. Okay, so discount allowed, yes. So that's it. Then we can take irrecoverable debts. Look here, irrecoverable debts. Now after that we can take the higher value side is the debit side, come to here, then BCD, then BBD comes to here, BBD comes to here in BBD comes to the debit side. Okay. Okay, so now look here. Okay, so if I number this one, A, B, C, D, E, F, G, H. Let's see how we can get the total of the credit sales. Now you can see the opening balances. List of the trade receivables drawn up at the end of the period. Now you can see. Think this is the trade receivables ledger control account for the April month. April month. This trade receivables ledger for the which month? April month. So you know we prepare, right, trade receivables ledger, trade receivables ledger, right? We prepare what? Trade receivables ledger, right? So trade receivables ledger, last month balance, list of balance. See, like uh, you know, we prepare now. In here there are individual accounts. Understand? Individual accounts are there. So in trade receivables ledger there are individual accounts. See, there are like A, B, C, D account. So, and for the March list, March list means, you know, like A, B, C, and D. At the end of the period, there is a balance A, B, C, and D. This total is the, it comes to here. Understand? Last month total. Then, so you know, there's a sales day book, right? And also, not only that, you know, sales day book are there, the prime entry book. As a prime entry book, hope you can remember. So, sales day book. Sales day book, we include all the credit sales. So, A, B, C, and D, right? So, all the A, B, C, and D credit sales. All the A, B, C, D credit sales. The total in here, total you can see. In here, credit sales means, you know, we made to these persons, right? So individually, you know, sales we record under these persons' name, right? Sales, sales. A how much? For B how much? Sales. For C how much? For D how much, right? This sales, like, you know, individually we record under here. The total, the total we recorded, the total of this one comes to here. Understand? The total comes to here. The individual things goes to the receivables ledger, individual accounts. Understand? Then the, you know, in cash book there are three columns, right? So in the cash book, so cash book, okay, debit side there are three columns. Think in the cash book, either debit side, the credit side, right? So what are the debit side columns? Hope you can remember. Discount allowed, cash, and the bank. So see A, B, C, and D. So on, so the amounts comes sometimes A may have discounts this much, cash this much. B discounts this much, bank this. C discounts this much, bank this. D discount this much, so cash this much. Likewise, we get the totals in here. Right now, you can see So you know the discounts individually, right? So this is debit, this one credit. This is, you know, sales paybook not performing the dual function. So the total debit to the receivables account, credit to the sales account. So cash checks, those things, you know, the total of the discount allowed column in here. So this now this one perform the dual function. The debit things comes to the credit side of here. This is not performing the dual function. Look here, this is very important, right? So this is the total summary of the previous things as well. Understand? So this is not performing the dual function. So because of that, you know, individually we debit to here, we get the totals to here, debit and credit the sales account. This is performing the dual function. So the total of this is individually, you know, A, B, C, D, discounts comes to here, discounts, credit to here, right? In the debit entry, discounts, discounts, discounts. And you can see only A and D made the cash, cash, cash. C and D made the checks. So bank, bank. All clear to you guys? So total of the discount allowed column, which means like this one comes to E, which means this. Cash, it is the C, it comes to checks, you know, D, it comes to where? It comes to understand. Then you know, finally, sales return things. You know, we have another prime entry book called, we have another prime entry book called sales return book, sales return. Think only A and sorry B. Think only A and D made the sales return. Not all. The total, you know, the sales return. So sales return right under here, return, sales return, right? So you know the total comes to F. It comes to here because it not performing the dual function, right? So the total of these comes to here. Individually we credit, and the total we credit to here, debit to the sales return account. Because these two not perform the dual function. Both double entry should be recorded on the ledger. This is perform the dual function. This is debit. These are credits, right? Then after that, irrecoverable debts, right? So irrecoverable debts we can identify through the general, which means the journal. In the journal, we can identify the irrecoverable debts. Irrecoverable debt, debit, right? Debtor control, credit. So credit. Right? So you can see irrecoverable debts normally comes individually. So you can identify through the journal, which means H. This one we can identify through, right? So if there are irrecoverable debts, it comes to here. Irrecoverable debt comes to here. See only one person, like only the B converted as irrecoverable debt. And also the closing balances you can see. Now, once we tally all the things, if we take the April list of A, B, C, D, and D. So, if we get the total of this one we can identify the total of this one to here, BCD and BBD. There. So just see where we can take the information. BBF balances we can take from the March list of balances. Sales where we can take sales day book. Understand? Sales day book individually we can identify debit to here and total debit to here, sales account credit. Then the after that discount column, this is perform dual function. So this is the debit entry. It comes to the discount credit to here, right? So and also we identify in here. Cash and bank columns, you know, cash and bank you can see. So these things are debit here, credit here, the total comes to here. Sales return, we can identify the sales return date. Irrecoverable debts you can identify from the journal. That's why in here it clearly says where we can identify. So that you can see sales day book, total of the credit sales, right? So the sales return day book, total of the credit sales, right? Then the you can see total of the cash received from the trade receivables ledger, total of the checks received from the trade receivables ledger, total of the discount allowed we can identify. Then apart from that, from the these are the things you can see. So and also they says about the similar things to the trade payables. I'll explain it to you. Okay. So can you draw this one? Right. So write the heading where we can extract the receivables ledger information. Write the heading. Dinel, hope you can hear me. Right. So write the heading where we can extract the informations of trade receivables ledger control account. Write the heading where we can extract the where we can extract the information of trade receivables ledger control account. Draw this and raise your hands. Draw this and raise your hands. So if you okay, draw this and raise your just wait 1 minute. Then we need to take the trade payables, right? Just see BCD and BBD. So how it goes? BCD Done? Have you finished?
The last part.
Okay. Now, as the same, okay, let's see the April month, right? So, trade, payables, ledger, control account. Trade, payables, ledger, control account. So normally, you know what are the things coming under balances coming under credit side and purchases, which means right credit purchase comes to here, right? So when we pay through cash, it comes to here. Why? You know, this is a liability kind of account. If so, you know, increase credit, decrease comes to the debit side, right? So then we pay through bank check, you know, it comes to here. Then discount received, right? Then the purchase return, right? So then after that, you know, the higher value side should be the credit side. This one, BCD and the BBD. So I number this one as like this, you know, I'll number this one A, B, C, D, E, F. So the B, C, D and BB the same, right? G, right? So when it comes to the uh, trade payables ledger, trade payables ledger, assume that there are three trade payables as X, Y, and the Z. X, Y, and Z. You know, March list of balances X, Y, and Z, which means think March closing balance. Total. This is the one which comes to here for the A total. So it comes to here BBF. I'll take the same BBF. BBF. The individual things comes to here. So the total comes to where? The total comes to understand, right? So and also we prepare the we prepare the purchase journal. Purchase journal. X, Y, and Z, right? So the total then comes to here, right? I'll take the red color, another color, right? Purple. So this is the B. You can see the total goes to here, and the individual things comes to purchases, purchases. The individual means the line items. Understand? It comes to here, right? And also when we prepare the cash book, think this is the debit side of the cash book, and this is the credit side of the cash book. You know the three columns: discount, receipt, cash, and bank. Discount, receive, cash, and bank. Think X, Y, and Z. Discount in here, this person paid cash, bank, cash. So you know the totals of these things. If I take red color, so for the discounts, discounts are comes to where? So discounts are the E. So discounts goes to here. So in here, this is performing dual function. So this is credit, this is debit, discounts. Discount receipt, right? And you can see cash one. I'll take like another color, this one. So this one cash, it's C. Cash goes to here, right? Cash goes to, so it is also comes to here, cash. The total comes to the control account. The line items comes to here. Then the bank column C, bank column C, it comes to, sorry, bank column is D, right? D comes to here the total. So bank paid by only Y. Why? Y paid, not the cash, only the bank. Well, it is only the X and Z paid through cash. Done. Then we draw the purchase return journal. Purchase return. Assume only the Z return the goods. With the we get the total. So this is not performing the dual function. So this is F. F. I hope you can see. Purchase return comes to here, right? So in here F, purchase return comes to, understand, right? Purchase return comes to here. Don't know whether you can see, right? Then we get the totals BCD and PBD. BCD and the PBD of the individual accounts. BCD So you know we prepare the April XYZ list of balances. The total should be tally with this one. I'll take the total should be tally with the same thing. Understand? Okay. The total should align with this one. It is how it goes. Just see, only the cash book perform the dual function. So these are not perform the dual function. Okay, write it and ratio. General done, right? Okay. Right. Okay. Now see in here the same thing. So I told you the trade payables ledger control account, right? Okay. So there is a further example in here, right? Now look here in the page number 126. Further examples shows an example of trade receivables ledger control account for a trade receivable ledger in which all the entries are arithmetically correct. Debit balance 1st July 2017, so 11,346. You know, debit balance comes under debit side under receivables ledger, right? Total credit sales, you know, credit sales comes to here. Check received from customers, you know, it's the bank coming under credit. Cash received, you know, it is the cash coming under. So trade receivables return from the customers, you know, it comes to the credit side. So once you balance BCD here, BBD comes to debit side, right? So then next one. So the ledger has proved the ledger has proved to be arithmetically correct because the total of the control account equal to each other. If they won't, if they were not equal, this would shows an error that had occurred. For an example, see, shows an example in which an error has been made in a payables ledger. The ledger will have to be checked in detail so the error can be found and the control account corrects it. Trade payables ledger, credit balance 11,646. Check paid to supplier during the month 10,860. You know, the purchase returned to the suppliers in the month 285. Brought from the suppliers in the month, so you know credit purchases this one, right? So this is the credit balances. The total at the bottom of the control account not agree, you can see. So the total is not agree. So there is a 120 error in the payables ledger. The ledger will need to be checked in detail and find the error, you can see. So the BCD BBD value, there is a matter, right? So balance this much. So we wrote two values in the total column, that is the matter in here, right? So notice that there is no double line under the totals. So the correct account cannot be finalized, and the rule of until the errors has been traced and corrected, right? So we need to find the reason and correct it. Now what I want to tell you in here, see, uh, so you can see there is a matter they have taken, there is a no, the totals are not telling, right? So now the thing is, I told you BCD value we takes from here, like BCD value we take the total of here and we write the BCD value in here. Once we write the BCD value in here, the total should be tallied, understand? Now we write first, we write this one, this one, this one, this one, right? So this one also comes, I told you. This one we take last month. We Can you remember April month? So if we prepare this for the April month, I told you we take the February month ending balance, list of balance, understand? So I told you, can you see? So when we take the opening balance, we take the previous month totals of the list of balance. So when we write it under here, so purchases and here BCD also we take the list of balance totals, total of the list of balance, right? So we try take it and write it under here. If we write the BCD, the total should be tally. Understand? If it is not tally, which means there is the error in the control account, right? So that is the thing in here. Okay, we need to find the error. So what has happened in here? The ledger has proved the arithmetically correct because now that is the thing. Sorry. The total at the bottom of the control do not agree. There is a 120 error in the payables ledger. The ledger will need to be checked in detail to find the error. So notice that there is no double line under the totals. You can see no double lines in here. The account cannot be finalized, and the rule of until the error has been traced and corrected. So there is something called other transfers. Let's do only the other transfers today. So next week we can finish it. So other transfers I'll tell you. Now before that I want to tell you something. Hope you can hear me. Send me a thumbs up. Hope you can hear me, right? Now the thing is, tomorrow also I'm going to do, because we need to finalize. Tomorrow most probably I'm going to do the class 6:30 to 8:30, all clear. Then the lesson can be finalized. Tomorrow 6:30 to 8:30 we can finalize the lesson. So tomorrow you need to log in like 6:30. Is it clear? Then I can do some questions as well. So then only the bank reconciliation part is remain, right? So I have asked you to do the questions. Make sure to do the questions, and just wait. I have asked you to do these questions. What I want from. So just remember. So I have asked you to do this one, right? So try to do this one before I discuss the answers. So try to do this one before I discuss the answers. I'm going to discuss these answers. This is the second lesson questions. Understand? We finished the second lesson. Hope you can remember what are the things we discussed. We discussed about books of original entry. Understand? And the source document, right? So we discussed. Then which means the business documentation. Then we discuss the books of original entry, remember? So then we discuss about the depreciation as well, understand, right? So these are the questions comprises those three lessons. Okay. So all the things are in which paper number 1. Okay. So I got the recent paper as well. I'll send it to you. Right. Then further examples, shown an example of the trade receivable ledger control account of our trade receivable ledger in which all the entries are arithmetically correct. So you can see in here, sorry, we discussed, okay, other transfers. This irrecoverable debts, I discuss. It's in page number, what is 127? What is the term called irrecoverable debts? I told you, if the debtor value can't be recovered, okay, debtors are not paying. This phrase describes a customer trade receivable who has bought goods on credit but is unable to pay this debt The debt will be transferred to an irrecoverable debt account. This will have to be recorded in the trade receivables ledger control account because it involves entries in the trade receivables ledger, right? So, account. In a contra account, the same business is both the supplier and the customer. So, indebtedness of each set of the transactions are ended in the control account. Now, I'll explain like this. This is a big example. Even I work in a company. So I'll tell you now. Yeah, I work in the Lyceum for 1 hour in the bookshop as the accountant, executive. So I'll tell you what is the thing. So it's like this, now the same person can be a supplier and the customer, which means a credit supplier and the credit customer, which means debtor and the creditor can be happen. For an example, I'll tell you now. Think, Lyceum, they Sweden, like they prepare the uniforms to the students, right? You are having the uniforms in the schools. They are like they are preparing, they are spinning the clothes, right? Now they take the clothes from one supplier, understand, and you can purchase it, you can purchase the uniforms from the uniform hub or something, like, or the bookshop also you can purchase, right? Now what I want to tell you, how the same person can be a supplier and the customer. It's like this. Now during the corona season, right? So COVID season, so supplier was unable to bring the clothes from the clothes means, like, the material, right? The clothing materials from the China abroad because of the dollar crisis. Understand? And clear, right? So because of that, what Lyceum has done, so they, from their funds, they import the clothes from the uh, uh, abroad and gave it to the supplier, understand, to measure it on credit basis. Then supplier sieved those clothes and gave it to the Lyceum to sell to the students, understand. So now we bring the clothes and gave it to credit basis to the gave it as credit basis to the supplier. So actually at that point, that person is our customer. Why? We gave the clothes on credit basis to sieve, understand, not the clothes, I mean the materials, right? So then that person at the point of that one, when we give in the materials, he is our what? Credit customer, understand. And also when that person sieve and give those clothes on credit basis to us with adding a value, that person is our supplier. Clear? Same person can be our customer as well as the supplier. Now think, I gave 500,000 worth of material to that person. That person Sim and gave us 700,000 worth of uniforms. We don't need to pay 700,000. Why? We gave 500,000 clothes in the materials. That person gave the 700,000 worth of uniforms. We only need to pay 200,000. Why? We gave the materials. That person gave the uniforms. Easy creative, right? We only need to pay how much? 200,000. Got it? That is the thing. That is the term called what? Contra entry. Okay. A business sold a Divya 6,000 goods on 1st of May. A Divya has supplied to the business with 88,000 goods on 12th May. The 60,000 of Duilla OV set off against the 80,000, 88,000 OV him on 30th May. This leaves 28,000 OV to Oduya on 31st of May. Now let's see. You can see uh, this is the A Odia's account, right? So now a business has sold A Odia's account, so that account is on the trade receivables because we sold on credit. Understand how much we sold? So 60,000, right? Then that person supplies 88,000. You can see 88,000. So then we need to set off this. You can see 66,000 on the trade receivables, 88,000 on the trade payables, right? So we only need to pay how much? We need to pay, why? Our receivable is 60, our payable is 88. Our payables is higher than 28, right? So first of all, we need to set off. Set off means we need to record credit side of the receivable. When we record credit side of the receivable, that receivable balance is we can cut off. Understand? And also we can debit 60,000 to the same receivable amount. Then the payable balance will reduce up to the 28,000 once we right contract. Okay, that is how it goes. Set off. Now, in when drawing with contra items, think of the set off as cash receivables are paid. The entries goes in the same side of the contra account as these items. So, the transfer of 60,000 appears in the credit side of the trade receivables ledger control account. It appears on the debit side of the trade payables control account. Student often find it difficult to work out where to put contra item set off, on which side of each control account they should be shown. Think of the set off as cash received or cash based. Then entries goes on the same side of the control account as these items. The contra will appear on the credit side of the trade receivables ledger control account, the same side as cash received from the trade receivables. It will appear on the debit side of the trade payables ledger control account, the same side as cash paid to trade payables would appear. Remember this, and you will not get it wrong. Okay, I'll explain it again. I'll explain it again like this. Contra entry. It's like this. Contra entry. I'll take example and explain it to you. Understand? So think example. ABC supply LKR 500,000 materials to XYZ business. Look here. XYZ business sold LKR 300,000 goods to ABC, right? Prepare the accounts of XYZ business and made a contraint. Now, if I take like this, now you can see. Okay. Now, these are the two businesses. What are the two businesses? You know, ABC and the XYZ. Understand? Good. ABC supply. First, ABC supply. How many goods worth of goods? 500,000. Supply means that's why the arrow to here. XYZ supplies all goods. How much? 300,000. Understand? They are asking the accounts from this business perspective. From which business? This one. Okay. So I'll take number 1 and number 2. Now, if I take the XYZ business, under trade receivables ledger, trade receivables ledger of the control account. So you can see we draw a separate account as ABC business. Receivables means our liability. This is a liability account. Increase big. And under trade payables ledger, you know, again we draw a ledger account as ABC. Sorry, not so. This is wrong. Under receivables, which means it is asset. Receivables means our assets, right? Receivables means our
Excuse me,
assets.
sir.
Sorry.
Sir, can I leave, sir? Because I have to eat and get ready, sir, because I have to go to town.
Yeah, yeah. Okay, only 10 minutes I'll do. You can refer the
Sir,
record.
what's the record?
No, no,
Okay,
you
sir.
refer the recording. It's fine.
Okay, sir. Thank you, sir.
Okay, bye.
Bye, sir.
So, bye. This is the liability account. Increase credit, decrease debit. Understand? Right? Got it? Now, first of all, you can see we purchase goods. Okay. When we purchase the goods, where we record in here purchase. How much we purchase? 500,000. Understood? Right? When we sell the goods, asset increase, so sales comes to here. How much we sold? 3. Now he is liable from mine. He need to pay 300,000. We need to pay how much? 500. In here it says, if you hard to remember the contra entry like this from the as cash pay. Now in here it says like cash received or cash paid. Now contra entry means we set off the balance. Set off balance in here. Cash this person cash pay. We are cash paying to this, right? So so contra entry we write like this, set off, right? In here we write it as set off with payable ledger 300,000. So that then this person is no need to pay us. So and in here we write set off receivable ledger. How much? 300. Once we balance, you can see only we need to pay how much? 200,000, right? 500. B, C, D, D, B, B, D. Only we need to pay how much? 200. Okay. Write it and raise it. Right. Okay. So that is the term called contra account. Okay. So now let's see control accounts and computerized accounting system. The final part. Let's finish the theory parts and let's see. So control accounts and computerizing accounting system. Many businesses use control accounts, especially the businesses that use a manual accounting system. In a computerized accounting system, the control accounts are an integral part of the accounts package and are prepared automatically. Computerized system ensure that all double entries transactions are completed upon entry. This ensured that the ledger balances. However, even businesses with computerized accounting package often prepare their own manual control accounts to ensure the ledger balances are affected any error. Now, though we prepare the computerized accounting which means using system, we need to apply the manual thing to check the thing. It says advantages of control accounts. The final part, advantages of the control account. Let's see. So there are several advantages to use control accounts. Location of error. Preparation of control accounts will reveal any arithmetical error that may have occurred. It will also show if a clerk has mistakenly omitted to enter an invoice of payment in the personal account. This is because the control account acts as a mini trial balance. However, there are some errors that will not be revealed by the control account. These will miss posting or compensating errors. Now, we can find the errors, but there are some errors we can't find the errors, right? Just see. Prevention of frauds. Control accounts are usually under the supervision of a senior membership of the accounting team or the accounts manager. This makes fraud more difficult since any transactions entered into a ledger account must also be included in the control account. So, it different members and staff are responsible for maintaining the ledger and the control accounts. It will be more difficult to carry it out fraudulent transaction. Supervisor or the manager provide an internal check on the procedure. Now think there are one person to the control account, one person for the individual accounts. The same two persons accounts the same, the balances should be 10, right? Information for managers. The balances on the control account can be assumed to equal trade receivables and trade payables. If the control accounts are up to date, it is not necessary to extract these balances from the ledger. This helps management control balance because information can be obtained quickly. Speed is one of the prerequisites of efficiency error control. Now you can see like we can give the information to the managers. Disadvantages of control account. Not all errors are revealed by control accounts. Control accounts only check the arithmetical accuracy of the ledger. Some errors will be revealed by the control, will not be revealed by the control account. For example, compensating error. Set of errors, one error will set off another error. And errors of original entry in the business document will be carried out through. Errors of commission will not be revealed. Errors of commission will not be revealed. So errors of omission and commission will not be revealed, and the compensating errors, these are the errors which not being through the uh, control account. When it comes to the errors not revealed in the control account, remember the COCO, top COCO, you under that COCO, compensating, omission, commission, and the control. Right? I gave you, and remember top COC, right? So in the like in the error correction, right? Did this one in the error correction, right? So I gave you the thing. So that is how it goes enough. So now we only need to do the questions. Understand? You can develop your own note for this one. I'm not going to give like just build like write the heading advantage of control accounts. Then write location of errors, prevention of fraud, information for managers. Just briefly write within one thing what are the things as a homework. Understand? So then disadvantages, write it and summarize and write, develop your own note. I can't give the everything, right? So then tomorrow 6:30 p.m. I'm going to do the end of the chapter question. All good, right? Then we can think next Thursday we can go to the bank reconciliation. Understand? So then next Thursday we can go to the bank reconciliation. So I have done up to all the things in here. So by the time then we can finish the bank reconciliation. Then once we done the bank reconciliation, third lesson also done. So that is how it goes. Understand? So next week I'm going to finish the bank reconciliation. Next week also my plan is to do Thursday, Friday, Saturday, and Sunday. And suppose when I'm doing the bank reconciliation, with that I'm going to do the second term paper questions discussion. Okay, second lesson related questions discussion, right? So that is how it goes. I'll tell you the plan: Thursday, Friday, Saturday, and Sunday. 4 days we need to cover. If not, we don't have enough time. Understand? Right. So let's meet Thursday. Thank you for the participation. Have a nice day. Saranai. God bless. Right.